Hello traders, so this is a 1 minute overview of price, and how we take entries. As you can see here, this arrow represents the Asia low. So as you can see, pretty much price just took out the Asia session lows, and also we are about to potentially chuck bullish, and we do. And obviously what we want to do is ideally draw the zone that created the shock, to look to take our entries on there. Now you can either set like a limit order. Now obviously don't get me wrong, this does have higher time frame confluence. Like, for example, we tapped into 4-hour discounted zone. I'm not going to show all that. I'm just going to show you the lower time frame entries and how to sort of adapt to entries. So if you just take out this low here as a stop loss, now let's say if we just target overall here, now we're not going to worry about targets just yet because we do have targets in place. We have the Asia session highs, or also we have the overall 4-hour highs. Now ideally we want to be over the overall swing, but psychologically to a lot of people that is hard to hold that long. You probably get excited and close out or take partials. Now we did have this all sort of like a bit of a range here, but this is clear as day. This is a very clear zone in balance, chart here, so very clear zone there. And that's one trade entry in which you could have taken. But if you wanted a bit more confirmation, then what we would look to do is obviously trade from the zone that created the potential break that we're going to get here. Alright, so obviously we broke structure here, sorry. We can go ahead and mark that as our breaker structure. Then obviously we do have a new zone here. So ideally what we would like to do on here is look to take another entry and just place a buy position on there. Have a stops below the overall low. Again, we're not going to worry about targets just yet. And as you can see, we just slightly missed the trade. If you did buffer, you may have been tagged in, may have not. But as you can see, the sort of idea is there. And then we have a new POI. Now the reason why I'm going to hold on to this POI is just simply because if you look at this in terms of previous mitigation, price mitigated this area before blasting to the upside. So obviously there's orders sat there, so price will need to come back down to mitigate those orders before continuing in the side direction. And that's essentially what we're going to be looking at here. So you probably may take out a new high. This can act as a setup as well, which I probably will do a post on Instagram. But as you can see here, right, this is a very textbook. We get tagged in, right? Oh, I didn't adjust my stops, so low there. As you can see, we just start to fly bullish. But I wanted to talk about this setup here, right? This is a very common setup. Now, as you can see here, a lot of people, this is literally structure 101, right? So previous mitigation. So obviously the reason why price moves up and down is obviously the BFIs, mitigating out their orders and things like that. So essentially what we want to be looking at is where the previous mitigations are coming from. So if we see price rallying from this certain area, we know that there's a potential order block here in which we're looking to trade from anyways, right? But as you can see, it didn't really tag us in, but that's not the case. That doesn't matter. What matters here is that this is a very impulsive move. So there's obviously orders there, and it came from the area that we were previously looking at. So we just look to just follow the sort of order flow, I guess you could say. And then people adapt to the range, but they forget to just factor in that little thingy. Now, I wouldn't personally enter here as well, just because a couple of reasons. You can look at this as liquidity. So if you extend it, there'll be people looking to buy on the third touch here, whatever. So there's going to be buyers entering the markets around this area. And also you can look at this as a POI as well, whether that's you take that as a wick, or whether you take it as a full order block, or just a zone that created the imbalance push. Doesn't really matter. But as you can see here, people have been wiped out there, so that sort of works in our favor, if anything, because we know that, okay, they've been wiped out the trade. The stop loss is obviously resting above our POI, so win-win for us. As you can see here, we put in a new low, then we create this new fractal high, and then again we just look to simply follow the follow the order flow. And it's it may seem as simple, but it's really not as simple as what it looks like. You can't just go on the charts and expect to see this play out every day. But what matters is that you're consistent with yourself. So just keep up with consistency. Repetition, consistency is the best thing ever. And I forgot to put my buy position there, but that's the PO I was looking at, because again, previous mitigation, where did the move originate from? Obviously here, right? We tap into this one here, give a nice reaction again. Okay, so the keywords here is obviously previous mitigation, and look at the momentum as well. Momentum is pretty a big factor in that as well. Now we would look to take another entry off here, but also we have this POI as well. Now you can go ahead and do whatever you want to do. Pretty much my stops there. And obviously, you know, you probably wouldn't enter all these due to psychological issues or whatever. But yeah, we just start to take out the 4-hour highs here. We've already blasted through the Asia highs. The Asia highs would be here. If we just look at this here, that would be the Asia highs there. And as you can see, we've already blasted through that. So maybe we wouldn't look at entries beyond this point, because that's our sort of liquidity system which we're looking to target through. So for those of you that are willing to do so, I want you guys to head over to this chart, and I guess you can call it homework, whatever you want to call it is fine. But I want you to head over to this chart, and I want you to head over to this exact date, time frame, and obviously the pair. Now I'll put that in the description, and also put it on screen here somewhere, probably in the bottom right, maybe the top left, I don't know. So you know, find it on the screen. I'll be there somewhere right now, and head over to the chart, and I want you to try and, you know, understand the thought process here. Now the key time frames that I used was the 4-hour, 15-minute, 1-minute. Now I didn't really, you know, the 4-hour is important because I was trying to figure out where we're at in terms of price. 15-minute I was trying to, you know, sort of intraday bias, and also I utilized the Asia run model for those of you that are in the course. And yeah, but I just want you to understand, you know, why I entered where I entered. And you know, I feel like if you can figure out for yourself, you will learn a lot. And if you have any questions as well, just pop into my DMs on Instagram, or if you're in my Discord, just send me a message on Discord, or pull it in a group chat with everyone, or a Telegram, whatever. It doesn't really matter. I'll respond as soon as I can. But yeah, that's essentially it really. I just want you to go over the chart, check over it, and see what you think of it. I want you to try and break it down for yourself and make it make sense to you, because this is a textbook setup trade. You know, I've been trading the Asia run for a few years now. I mentioned it in previous videos, a couple of years, few years. And it's so consistent, it really is. So definitely watch more videos of mine and check it out. So with that being said, guys, thank you so much for watching. Also, I've moved into a new house now. I'm settling in, getting back into my groove, and I'm feeling good. Good vibes only, you know the score. But yeah, with that being said, guys, thank you so much for watching, and I'll catch you on the next video.